How can you retire in 10 years? I'm going to be going through this today. I talk about Bitcoin a lot on my channel, so I'm going to skew this to include Bitcoin, but not entirely Bitcoin, because it's probably not realistic for a lot of people. They want some exposure outside of Bitcoin to US equities, or they have a 401k, they want to get a match, or they have some money just in a Roth IRA somewhere, and they want to keep something outside of Bitcoin. So I want to go through this example today. We'll go through two different scenarios. One is if you already have a bit of a nest egg starting to be saved up, and one is if you start from today exactly with zero saved. Now, to be clear, this is not going to be super easy. This is not like you throw in $1,000 today and then 10 years from now from your $1,000 in Bitcoin, you're going to retire. No, like we're going to try to be somewhat cautious with our assumptions, at least for the Bitcoin community. And also, you have to realize in 10 years, it still requires a lot of effort to retire in 10 years. Even if you get really good returns, investment returns, you still have to sacrifice, right? So we're going to be going through that. If you don't mind though, hit subscribe so you can see future videos like this. Also, if you want to trade crypto, you can actually use leverage to trade crypto and get even better returns with the link underneath the video to BYDFi. You can get signed up in just a few minutes because they don't KYC. You can deposit crypto directly onto the platform. So you can start with a deposit and then you can start trading, whether it's Bitcoin or Ethereum, or if you deposit USDT, you can trade a bunch of different assets. So check this out underneath the video. We have a trading competition going on right now. It's not even really a competition. We call it a competition, but it's like a giveaway where we're giving away money just depending on how much everyone trades that's ever used my link. So every time that anyone adds $1 million to this overall volume, it adds another $100 to this prize pool. So check this out underneath the video, as I said. Now, we're going to show the numbers how to retire in just 10 years. First of all, I want to get an idea for my audience. So just looking behind the curtain here, actually the majority of my audience is between 35 and 54 years old. Of course, there are some people that are a bit younger and a bit older, but we kind of average out around 45 years old exactly. Thought this was good to know because most people around 45 probably have started a nest egg. So I followed up with this question: how close are you to your retirement number? And looks like a lot of people are less than 5x their annual spending. Some, though, are 5 to 10, some are 10 to 20, some are much more than 20 even. But I thought this would give us a good idea, again, to know where people are right now, because I have to kind of take that into assumption when we're talking about retiring in 5 years, or 10 years, because obviously if you already have $500,000 saved up, it's going to be much easier to retire than if you have $0 saved up. Now, the next question was, what do people make and what do they spend? So I made some assumptions, but again, your situation is going to be different. We're going to assume that you make $100,000. Now, that's much more than some people make, also a lot less than other people make, but we have to start somewhere, and it's not going to be easy to retire on $30,000 a year. You have to bump up your income, at least if you're somewhere like the US. Obviously, if you're somewhere with lower cost of living, you can adjust these numbers. Spending $60,000. Again, I know this isn't easy for a lot of people and they might spend more than that, but if you want to retire in a certain time span, a very short time span, you have to save and invest a significant amount of what you make. And actually, this article by the Mr. Money Mustache breaks down how basically based on your savings rate, you can figure out how long it'll take you to retire. So a normal savings rate of 40% would typically take you 22 years to retire. Now, I'm going to show you how to do it in 10 with the power of Bitcoin, but as you get down further and further to higher and higher savings rate, you can retire much faster. One of the reasons that we're going to retire in 10 years as opposed to this 22 years stated here is we're going to use Bitcoin, which gives you better returns. Also, they assume a 5% return as opposed to a 10% return. They're assuming a 4% safe withdrawal rate, so basically you need 25 times your annual spending. So with $60,000 a year in spending, this would be $1.5 million. Again, it's going to be different for everyone. We spend more than $60,000 a year. Some of it's on frivolous stuff, but we spend more than that. So again, it's not going to be right for everyone, but we have to start somewhere. So these numbers make sense because they're easy to change for your own situation since they're nice and round. So spending $60,000 when you make $100,000 post-tax, and everyone's tax situation is different, that means that you have $40,000 to invest. We'll say you put half of that in the S&P 500. I think that's pretty realistic because some people want some exposure, or they have a 401k. They want something that's a little bit safer. So we'll say half of the money goes into an S&P 500 index fund. And in this scenario, we're going to say you actually start with some money, right? You have maybe $100,000 in the S&P 500 now, or in 401ks, right? IRAs, something like that. You have $100,000, you add $20,000. And then we're also going to assume that you have some Bitcoin too. Again, we have to make some assumptions. We're going to assume that you invest half of this $40,000 into the S&P 500 and then half into Bitcoin. Bitcoin's sitting right around $113,000 right now. So that means that you can buy about 0.18 Bitcoin. We're also going to assume that you already have half of Bitcoin. So again, base assumption is that you have $100,000 in the S&P 500 and about $50,000 to $60,000 of Bitcoin. This means that at the end of the 1 year period, you'd actually have 0.68 Bitcoin. Total invested, you would have almost $200,000, which is about 3 times your spending. Now we're going to assume from here on out that you get 6% raises. Again, I realize this isn't the average. This is higher than most people get. But if you want to retire in 10 years, you have to make more and you have to be able to save more than most people. So 6% raises for the next 10 years. By the end of this 10-year period, you're making just under $170,000. This allows you to invest a lot more. You're only going to increase your spending by 3% each year, but you make 6% more. So a lot of that is going to go into investments. Again, half to the S&P 500, half to Bitcoin. By the end of this time span, you've been able to accumulate one full new Bitcoin, and you still have your original half of Bitcoin. By the end, you get about 1.56 Bitcoin. Bitcoin's price, we're going to assume, is going up 25% a year. So you're buying a lot less each year, but the price has gone up. This is where a lot of the returns come, to be clear. And if you're not bullish on Bitcoin, this is going to be very hard. And this does give you a lot of exposure to Bitcoin. By the end of this time span, even though you're investing 50-50 into the S&P 500 and into Bitcoin, and you actually start with a lot more S&P 500, you end up having about 65% of your portfolio in Bitcoin. All right, so 65%. Some people don't want that exposure. You could trim over time, but in this scenario, it does help out a lot because it's performing quite well. It's still under $1 million 10 years from now in this example. By the end of this time, your spending has gone up to almost $80,000 a year because of inflation. You have over $2 million saved up, though, a lot of that in Bitcoin, and you have 25.7 times your annual spending, which means in theory you should be able to draw down your principal over time. You can sell, depending on whether you want the S&P 500 or Bitcoin, you can sell a little bit at a time and fund your lifestyle, hopefully indefinitely at that point. And what if you start from zero? Right now, everyone is starting from $150,000 in assets. Some people are starting day one. So we're going to assume you don't start at 100,000. There has to be some way to make this up, right? Because if you start with less money at the beginning, it's going to be harder to retire. That's just how it is. So we're going to assume that you make more and you spend less. So you have a 50% savings rate. $110,000 you make, you spend $55,000. So you're able to invest $55,000 a year. We're going to make all the assumptions the same. By the end of 10 years, even starting with zero at the beginning, you have 25 times your spending. So pretty awesome there. Now, you could say, well, my wife and I work, or my significant other and I work, and we make $200,000 a year. Our spending is $100,000, right? The numbers work out to be exactly the same. All that matters is the percentage of your spending versus your income, right? That's what's important. You could get there faster. Let's say you make $260,000 a year and you spend $110,000 a year. You're actually going to have 33% of your annual savings, or of your annual spending after 10 years. 33x. So you could retire after 9 years, right? Or you could just spend less right? At the end of the day, all that matters are the investment returns, how much you spend, and then how much you invest. Another way to look at this, you can actually go to, I think it's called Net Worthify. There's a calculator, and it breaks it down for you. So you can put in your annual return on investment, your withdrawal rate, your income, spending, all that kind of stuff. So let's say you make $60,000 a year, because there are some people that don't have a high income or a six-figure income. You still need to save a lot, right? Again, what matters is the percent that you're saving versus the percent that you're spending. So let's say you can't quite save as much, but you can still save $15,000 a year. So you're spending just under $4,000 a month, and that gives you should be 25% savings rate. So the current portfolio value we'll put at 0. The annual return on investment we'll say 15%, because you're still going to have Bitcoin, which is going to perform very well, but you're also going to have the S&P 500, which maybe gets 10% a year, and your withdrawal rate we'll say is 4%. It would take you about 18 years. Now, if you have a normal rate of return, like 10%, it would take you 22.5 years. So it still doesn't take that long compared to most people. Most people work, 40 years? You get it done in half the time. Some of the common knowledge is to invest 10% of what you make, or that's what people used to say. So 10% means that it would take 33 years to retire. A lot of people don't get started right away, or maybe retire at a bad time and you only get 9%. Well, that adds a few more years, right? That means you have to work about 36 years. Now, of course, I want to hear your thoughts on all this underneath the video. Do you think this is realistic? Again, I'm not saying that everyone can do this. I'm not even saying it's easy or anything like that. I'm just showing a path, right? And of course, you have to take your own path and make sure you're comfortable with the risk, because by the end of this period, you would have a significant amount of Bitcoin. Maybe you don't want to go 50% Bitcoin. Maybe you want to go 20%, or maybe you want to go 70%. Based on our assumptions, you would retire a lot faster if you went 100% Bitcoin than 50%. But again, that's not realistic for most people. Let me know your thoughts underneath the video. I really do appreciate it. I'll see you all soon. Check out the link again if you want to check out BYDeFi. And I did post this early in my Telegram, which is completely free. It's linked underneath the video. Talk soon. Bye.